Morning, Fractal Effects team. Sorry, we're having some issues with our live stream. Before we get started, make sure you read the disclosure in the footer section of fractaleffects.com. We're still in the morning session tracking oil here. Also, if you're joining along with us, make sure you're doing a demo account. This is for educational purposes only. We are not financial advisors, and this is not financial advice. So we had Fed Chair Powell testifying today. It started at 10 o'clock. This entire week, we're going to have Fed Chair Powell in the news. So we're going to avoid any U.S. related assets. So we have a bit of a mixed model here. As far as the spotlight model is concerned, we're right across the board. We have not had a confirmation yet. We have a bit of we had a slight upside expansion going into London, and then more of a engulfing model here, slight downside after New York, but a lot of consolidation. Obviously, it's because of the events happening around the world. Oil prices are going to fluctuate. We did have a big drop off. So we manipulated down. We still have not broken out of the range, so we have a mixed model right now, the slight bias to the downside because London broke Asia lows, but we need to break the range. So we took the manipulation range to the downside, just short of the DSD low. And we did have a close over the range. So unless this candle is an immediate rebalancing candle, an engulfing candle, then we might just make a run for the DSD before we turn back around. So we're going to wait for confirmation, retracement, and extension. Let's take a look at, so here's Brent crude oil. So on the 4 hour, we hit a 4 hour fair value gap here. Let's see where the DSD low is. DSD low is pretty far down there. So 50 seconds left. Looks like we're getting an immediate rebalancing candle. This could be a clean MM. Twenty-four seconds left. So strong blue zone up there that we bounced off of. Okay, so this candle did close. So this was an engulfing candle. Again, on the 4-hour, we are still in this 4-hour fair value gap. We've swept out these 4-hour lows, and all candles are closing inside. So it could just push us up, but we'll see. So after a clean MM, we want to see a 5M bullish fair value gap. One minute, 49 seconds left. Strong push up. So we're in that 4-hour fair value gap. Brent crude also more of a cleaner rejection off the midpoint of that 4-hour fair value gap. It's a 15-minute fair value gap up here. Thirty-five seconds left. It's a strong push up. Let's see if this fair value gap is left open. That could be the foothold to climb up. So far we still have a clean MM. So if we get another push up here with a bullish confirmation, that could be our signal. To head to the other side of the manipulation range up here, or at least into the blue zone. Gotta wait for all points of confluence though. When you're red across the board like this, you gotta wait. Especially after the range is already formed. After the spotlight range is formed at 10:30, we have to see that confirmation first, regardless of what our bias was coming in from the blue zone. Now keep in mind, we didn't have much of a bias coming in from the earlier session. As mentioned before, we hit this 4-hour fair value gap, but we have not broken out of London range, which has not solidified our model. We just barely broke the manipulation range itself right before the spotlight range was formed. So we're just finding out right here, the last 15 minutes. That's the first bit of confirmation we've had, is a manipulation move to the downside first with a immediate rebalance, which is usually a good sign. But we still got to wait for this 5-minute fair value gap to be created, use that as our foothold, tap it, then a 1-minute fair value gap to be created and tapped. Still a series of rules we have to wait for, and then we also have to wait for confirmation. Luckily the range is pretty small. We do also have a bit of power of 3 happening here, consolidation, manipulation where we took out all those lows, and that could be a signal to go up. Today is also a Tuesday. We've already set the low for the week. Look at that big drop that happened yesterday. Before that, we were slowly going up, again, because of the conflicts around the world. One minute, 9 seconds left. Let's see if this foothold is left open. It's the only way you're ever going to have an effective strategy, whether or not it's our strategies or whatever it is that you use. You have to use it every single day, consistently. You can't falter. You can't cheat on your own strategy and or get FOMO on your own strategy. If you have a set of rules, follow them down to the T. That's where most people fail. I guess a perfect analogy would be if you take the same path from work to home every single day, and then suddenly one day you decide to take a different path and you get into a car accident. Are you going to blame yourself for taking that other path? Would that car accident have happened if you had just stuck to your regular path? That's how you got to look at strategies. If you're consistent with the strategy every single day, win or lose, you're going to be at least comfortable with the path that you've taken. But every time you shift that path, you try something different, you jump in too early, you get FOMO, and something bad happens, that's going to mess with you. So this is a good sign. We've left this fair value gap open, also started moving up. I'm also going to mark out this fair value gap because that was the first fair value gap created at 10 o'clock on the 4-hour candle. When the first 4-hour candle closed and the second one opened, lets us know what's happening on a higher time frame, whether or not we're above or below that range. Also keep in mind, when you're buying, be cognizant of your PD array, your premium and discount array. So if you're buying, you want to do it at a discount. If you're selling, you want to do it at a premium. Now, how do you make sure that that's what's happening? Well, lucky for you, the spotlight indicator lets you know where NYC open is. It marks it out for you right there. That's the NYC opening candle, that green line. You can change this in the settings to be dotted, solid, or whatever. I kept it at a dotted line because I didn't want to get mixed up between the manipulation range. So that's NYC open right there. And it's letting you know from that range, if I buy down here, then I'm buying in discount. So I have to have that market come back down here. This would be the perfect 5M fair value gap to buy in, to go long. Because right now I'm in premium. Anything above this line is premium, anything below this line is discount during the New York trading session. That's NYC open. There's our NYC opening gap and our 10 o'clock fair value gap. They're both the same thing. So it's good that we're above it, but again, that means we could have a market that just kind of takes off from here. I still need to buy down here. Not to mention, this is the only fair value gap that's been left open so far. This one closed off. Here comes the market. I'll also paint out this one right here. Keep in mind, both of these strategies, both of these indicators are forward-thinking indicators. They're not time-lagging indicators that are showing you past data. This is showing you the manipulation range, where it's going to be. This is letting you know where your confirmation is once you've broken out of that range. Or 80% chance once we have a confirmation that we're going to get a retracement back into the range and then an extension. That's when we look for our entry. We wait for those set of rules to be met. Still waiting. I want it to come all the way back into that fair value gap. Then we'll see if it sets up for a 1M fair value gap. Still gesticulating. I want to see a full break into this fair value gap. I just want to make sure we have it marked out perfectly. See, again, this is where people get FOMO. When they see a candle come close to their fair value gap and then another one take off without even touching it. If that happens, which is rare, by the way, then so be it. It's fine. But they know that you're going to get FOMO. Remember, this is psychology and reverse psychology. This is one of the most elegant algorithms ever created because it's created based off of how human beings think, where they get scared. And it plays with your emotions. That's what the market is. It's emotion. It's emotional based. But it's not being controlled by your emotions. It's controlling your emotions. Still got to wait for it to come into that fair value gap. Let's see how Brent crude oil is doing. So Brent crude oil's already come into that fair value gap. Just barely. Drop down to the 1M here just to see what sets up. There we go. It's a good tap. I'd like to see it dig in deeper. When you don't see it dig in deeper, that just means it could come back later and dig in deeper. I'd like to see the midpoint being touched. At least on one of these two. Well, 7 minutes away from 11. It looks like it's setting up here, close. There we go. The deeper we dig in now, the less chances that we'll come back later to sweep these regions. We have a blue zone running right under here as well. Again, this is US oil on the left. We're using Brent crude oil on the right as our diverging pair. Brent crude's already hit the midpoint of that fair value gap. So this is the last stronghold for a bullish bias. We want to bounce off of here. If we break down here, that's a double break. That means we lose any bias, we get rid of any bias that we had for a bullish run. So I want to see it tap here, which it already has. Now on the 1M, I want to see a 1M bullish fair value gap created and tapped. That'll signal that this thing actually wants to go up, and then we should get that bullish confirmation soon. Just got to stay patient. We've also put together a free PDF for you guys, a free ebook that goes over mastering market analysis, goes over everything from the higher time frame all the way down. All you got to do is go to fractaleffects.com, just go to the, scroll down to the bottom, hit the buy now, and you don't have to sign up, but just hit the buy now, and that'll put your information, your email address and your name in our database, and then we'll send you the, we'll email out the PDF to you guys. That's just a freebie from us for any new beginners who want to read about market analysis, mastering market analysis. It literally tells you exactly how the market works, and we get rid of all the fat. We're not talking about any specific models. We're going over how the market actually works and what the market is actually doing. So just go to fractaleffects.com, scroll down, hit the buy now, and just fill in your information, and then we'll send you that PDF out. You don't have to buy anything. Also, we have partnered with TradingView. So in that, at the same section at the bottom there, where it goes over our package, you'll see a link, a TradingView link. You click that, you get $15 off your next TradingView package. Just a little gift from us to you. The link for our website's also in the description section of this live stream. So we've hit the midpoint. That's what we wanted to see. We're still looking for that bullish fair value gap to be created. We had a bit of a volume imbalance being created here, but nothing that stuck. I like this. I like it when it digs in deep, though. I want it to fill all of this in first. There's a higher chance that it will not come back and sweep this later then. Not 100%, but just a higher chance. Because here's the thing. If we do get a setup to go long, this is the safer stop loss down here. This is the more protected area. So when we do find an entry here, we'd like it to be close to this. But there are times where we'll get a lot of gesticulation, then we enter a trade in this area, and it comes back and sweeps it one more time. Again, psychology and reverse psychology happening at the same time. Just to frustrate you, just to take out your position. So this is always the more safer stop loss once we've entered. Because that would be a definitive second break to the downside. That's the dealer revealing their hand. That lets us know that the market actually wants to push down. Mastering a stop loss, that's what's important. Remember, capital preservation is our primary goal. So you want to make sure every single trade you've ever, think about entry. Make sure you know where the stop loss is. Too many people trade without a stop loss, or they think it's going to bounce back. There's got to be sections, and luckily with our strategy, once you break this, that is a double break in the direction of the manipulation range. That means there's a 70% chance that it's going to continue to drop. You can't play against probabilities. We're not gamblers, and we're definitely not Nostradamus. We're not predicting. We're using probabilities. 70 to 80% probability of our directional bias. Know that. Know that when we enter a trade, when Fractal Effects enters a trade using our strategy, there's a 70 to 80% chance that it's going to go in that direction. And if it doesn't, then we can't feel bad about it. Somebody handed me a lottery ticket and said there was an 80% chance that I would win. I think I'd take that chance, regardless of how much that ticket costs. So where most people are getting FOMO and jumping in, we're still waiting for our strategy to set up. Oil is, again, moving very slowly. We have a lot of consolidation. I actually wouldn't want to trade on a day like today. Like, look at this. The fact that we have not left London range, a lot of back and forth, a lot of consolidation. We're just trying to show you where the trade setup would be. I've already decided, for me personally, this is not a day I'd want to trade. That much consolidation in the NYC range? No. Sitting in a 4-hour fair value gap on a higher time frame? Manipulation to the downside, even though we're red across the board? They're playing both sides. They're engineering new liquidity here. There are people going short off of this, and there are people going long off of this power of 3. Consolidation, manipulation, and there's people that are looking to go long here. But they're playing both sides right now. This is not a definitive directional bias. But we're still here. We're live. We're going to walk you guys through what we think is happening. Reading the ticker tape. So we still don't have our bullish fair value gap here. We'll change the color of this fair value gap to red. That's our 10 o'clock fair value gap. Also the New York Open. There you go. That's a nice push up. Still wait. I'd like to see it get past here as it creates our bullish fair value gap. Two minutes past 11. We'll know in this next minute if we get a fair value gap here. And unlike other traders and other strategies, we don't sit here watching the market all day. If we're not in a high probability trade setup 1 hour after the range formation, range is fully formed at 10:30. So if we're not in a high probability trade setup by 11:30, we're done for the day. Or we'll come back in the evening if we feel like it for the Asia session. This is why we wait for all of our rules to be met. It's already taken away that fair value gap. There's nothing here. There's no foothold. Can't climb a mountain without a foothold. And you don't want to see a displacement candle and an immediate rebalancing candle like this from this point. Remember, that's the 10 o'clock fair value gap. Now we got to wait for that setup all over again. If you can master patience, if you meditate and you can master patience, honestly, that is actually 80% of it. That's how you master trading, by mastering patience. And then you have to have a great strategy with a great set of rules. But that's being offered to you. That's no different than walking in and just purchasing something. It's the mindset that's hard to master. To have the patience to see that setup happen all over again. Now, luckily with our strategies, we do have alerts. So if you don't want to wait, for example, let's take oil. We don't even have a spotlight confirmation yet. But the second you get that confirmation, meaning this range is broken and there's a 75% chance that the market's going to push in that direction, that confirmation just pops up as an alert through TradingView on your phone. So you can actually mark up all the stuff that you want and then go do your thing, maybe make breakfast or whatever. And then as soon as that confirmation happens, then you know there's a 75% chance that we're going to have a retracement back into our range. That's 20 years of aggregate data that shows us that. This is an algorithm. Algorithms repeat. 75% chance once we get confirmation that we're going to retrace back into the range. That's when you look for your actual entry. But from confirmation to retracement, that could take about 15 minutes. So set up your charts, go do your thing, brush your teeth, make some breakfast, whatever it is that you do in the morning. And then as soon as you get a confirmation on your phone, then you can jump back in. That saves you watching all this mess. For example, let's say we never break out of this range. We don't break out of this range by 11:30. That's it. Means you don't even have to jump back onto the charts. You never got that confirmation on your phone. But we made a commitment. We're here watching this live with you guys. We don't have that luxury. So we're going to walk you through this. Nothing from Brent crude oil either. Again, look at this. This is not the kind of market I want to trade. You should not get this much consolidation in a range that has not been broken, sitting in another range that has not been broken. London has not been broken to either side, and New York has not been broken to either side. Now, that's obviously because of the conflicts happening overseas. And then as far as the U.S. assets, we had Fed Chair Powell testifying today at 10 o'clock. This entire week, we have Fed Chair Powell speaking. You do not want to be in the market when that man speaks. In the markets, he's the voice of God. What he says will literally dictate what's going to happen next in the markets. And he's speaking, I believe it was today, tomorrow, and it might be even Thursday. I'm not sure. We'll check the economic calendar in here in a minute. Looks like we're getting another push up. This could be candle 1 of a fair value gap. And keep in mind the indicator paints out the fair value gaps for you right there. I'd already started doing it. It lets you know that there's something happening just visually. It's not fully formed yet. Obviously this would be candle 3. Sorry, this is candle 1, 2, and this would be candle 3 to see if we get that fair value gap. So I want to see this fair value gap stay open, tapped, and then I want to see a candle close above here. That'll at least give me an indication. I've already said this. This is not the kind of market I want to trade today. But just to show you guys how probabilities can enhance your trading, we're going to walk through this trade. Four seconds left. There you go. There's your first 1M fair value gap that was created. Just going to make sure I zoom in here. Mark them up clean. Zoom in. Otherwise you can miss it sometimes. Now we need a foothold. You can't climb a mountain without a foothold. There are too many people that just wait for this fair value gap to be created and think, okay, great, this has already been created. This is showing us bullish momentum. I'm going to jump in right here. That's not what the strategy is. Now I need to tap this. This is my foothold. This is where I put my foot in this mountain to climb it high. This is an unanchored trade. Never take an unanchored trade. Because if I take it here, where's my stop loss? If I take it here, my stop loss is down here. Know where your stop loss is before you enter a trade. Otherwise, you're jumping in blind and you're doing it because of FOMO. There is no foothold and you don't really care. You just think this is fun. You're playing this like a video game. This is a job, not a game. Now, it could use the 10 o'clock fair value gap here as well. But I want to see it come down here. This is the first fair value gap that was created reluctantly, I should say. And I'd like to see it get tapped. Otherwise, this could just be a runaway market. No other fair value gaps have been created here. And you see what it's doing here, by the way? The fact that it actually is drawn to the, I've said this before, the market is only doing one of two things. It's programmed to do one of two things. Take out liquidity in the form of your buy stop and sell stops, and fill in inefficiencies in the form of fair value gaps and volume imbalances. That's what it's programmed to do. That's what it is doing. That is the lifeblood of the market. So for anybody who says, this is buying and selling pressure, this is human beings on the other, no, this has nothing to do with it. If it did, why did it just come back into our fair value gap? Just tapped it right there. Tiny tap. A tap is a tap, though. Why did it do that? Because this is a highly sophisticated, elegant, the most elegant algorithm ever created. And it's working off of psychology and reverse psychology. That's what this is doing. And what we've created here essentially is a algorithmic translator. It's letting you know what it's doing. There you go. This is great. Now, if this closes, we've already tapped here. This is what we want to see. 15 seconds left. If it closes above here, this would be a good push up. Again, I'm not interested in this market today just because of the way it's been behaving, but we're just going to walk you through exactly. There you go. That would have been the setup on a day, on any other day. That would have been our entry. 2 ticks below here. Remember I said the safer bet is down here because it could take one more sweep down. I'm going to take it right here. Now for my TP, I'm going to go back up to the 5M just to see where the 5M actual levels are, the important levels. You're just looking for a 1 to 3 risk to reward. Right there. Blue zone, these highs. That's where I'd be more comfortable at. Sometimes you got to aim for the low-hanging fruit. Now again, this is not a trade setup I would have taken today. Look at this amount of consolidation. Also know when to walk away. You got to know when it's not going to be a good day. This could actually still gesticulate here for a very long time, maybe even sweep this low, then go back up. That's why I wanted to set it a little lower than here. But again, know when to see the telltale signs of a messy, sloppy day. When you have not broken out of 2 ranges. We have not broken out of London and we have not broken out of New York. Look how tight that is. That means it's going to shoot out in one direction, but it could wick this and then jump up. We have a 15-minute fair value gap right here. It could just bounce off of that and then continue down. So, sloppy day. Remember, higher time frame analysis. You want the 10 o'clock candle on the 4-hour to be a continuation candle. I'm just going to delete this for a second just to show you guys. This is the 10 o'clock candle. This should be a continuation. So what were we doing here at 6 o'clock? We were pushing down. We hit a 4-hour fair value gap, unfortunately. That means there could be a reversal. And that's what we're hoping on right now. Everything's set up to do a reversal. But ideally, you want this to be a continuation candle. That's another reason I don't like this trade setup right now. You do not want the 10 o'clock candle to be a reversal candle. So if your 10 o'clock candle hits a 4-hour fair value gap, a daily fair value gap, there's a chance it could reverse. And those are also trade setups I don't like. I want to know which direction we're going. Right here, it's playing both sides. It could either be a continuation candle, which is what it's supposed to be, but then it's giving us all these indications that it wants to drive up first, which drops our probabilities. Look at that. Another sweep down. Now let's see. We got about 14 minutes left in our stream. Brent crude oil has already taken out these lows. Let's jump back up to the 5M here. We're still inside that fair value gap though. We're also hitting a blue zone. But the longer it stays here, the lower the probabilities get. Now it's already done everything it needs to do here. Brent crude oil's already taken all parts of that fair value gap. We want to start seeing displacement candles. This is too much consolidation. Let's see how long it sits here if it just punches through. It's drawn back down to the blue zone, so it wants to tap the blue zone before pushing up. The way these strategies are set up and the way these probabilities are set up, remember you're risking we're always going for a 1 to 3. So you're risking $1 to make $3. You're risking 1% to make 3%. And when you have a strategy that's 70 to 80% accurate and picking a directional bias, that math will always keep you in the green in the long run. Even if you have a loss, even if this turns out to be one where it punches through. And that's why, again, there's other points of confluence that we use to let us know whether or not a market should even be traded. And I've already said it, this is not a market I'd trade today. A little too much back and forth happening here. Back at that blue zone, punching through the blue zone here. I want to see if they hold US oil here at the blue zone, regardless of how deep we dig into on Brent crude oil. That's another way you use that diverging pair. You want to see where they're holding one market while they're allowing the other one to take extra liquidity. Right now, Brent crude oil is the weaker pair. And remember, there's always a shift that happens. There's always a shift that happens where the weaker pair becomes the stronger pair for just a moment, right before a reversal happens. Now, obviously, you want to use this with other points of confluence. It's not the be-all, end-all. But you will see that happen, where the weaker pair becomes the stronger pair before both of them push up. So ideally, if we get Brent crude oil taking out this high first. That high. Or even this high, technically. If we get it taking this high out first, that could be another indication that this thing wants to push up. Oh, time flies. 9 minutes left before 11:30. That's the end of our stream. I'd like to see if we get a push here first. But look at that. 1 full hour and we have not had a confirmation. This late in the game, I personally, if I was trading this market, I would have waited for a confirmation. Now, if you're wondering what a confirmation looks like if you're joining us and you're new, there's two indicators that are playing on top of each other right now. There's the spotlight indicator and our blue zone indicator. So spotlight indicator, they both have their own set of rules and points of confluence. But as far as what a confirmation looks like, it's like that. You'll see an arrow that lets you know the range has been broken, our dealing range has been broken, and then that's what signals a 70 to 80% chance that the market will continue in that direction after a retracement. That's what happened. You had a retracement back into our zone. This is Asia session, and then an extension. But here we have not had a range break at all, which is another thing that made me want to avoid this market altogether. Seven minutes left in our stream. Now the second, if this bottom gets swept, that's what we call a double break. That's the dealer revealing their hand. That means this market is going down, most likely into this 4-hour fair value gap down here. There's your DSD low, daily fair value gap. There's a lot of points down here, a lot of liquidity down here. That's why I called this the last stronghold of the bullish bias. Like Lord of the Rings, this is the last stronghold right here. The market punches past through this and breaks the bottom of this. That's the dealer revealing their hand. This thing wants to push down. Six minutes left. This is actually very rare. Rarely will you be this deep into the trading time where we have not broken any of these ranges. I mean, look at this. All of New York stayed within this tight range. All the way from 9:30 open till now. So this will be our last 5M candle. And that was why I wasn't interested in this market. You can foresee this stuff. Remember, time in the market is more important than timing the market. It's a famous quote. Being able to recognize this kind of pattern setup, this kind of slop. Knowing when to walk away from it. About 4 minutes left. So right now the weaker pair is still the weaker pair. It's still driving down. Three minutes left. So we'll be live tomorrow and Thursday, even though again we have Fed Chair Powell testifying. We're still going to go over some educational stuff. So please join us. We're going to be live tomorrow, same time, 10:30, and then Thursday as well. We'll go over some of our Bitcoin trades. This strategy works across the board. You can trade Bitcoin on a Saturday, or you can trade NAS on a Monday. It does not matter. We're called fractal effects for a reason. Fractal, what happens on a smaller scale happens on a bigger scale and vice versa. It's the same strategy we use on higher time frames to jump into 4-hour trades, swing trades, investment opportunities on a daily time frame to see where the market's going. These strategies help you figure out exactly which direction the market is going to go, why, how far. And then on top of that, since we're not financial advisors and we can't give you financial advice, we've created a market news section at the bottom there of Fractal Effects. It comes, it's part of your package. But we go out and we interview analysts. Same stuff you're paying for on Bloomberg, on MarketWatch. That's part of your package. So you can jump on and see if there's an investment opportunity that analysts are talking about. And you match up what those analysts are saying and what their projections are with our market analysis, because we show you how to figure out the daily standard deviation of where the market's going on a daily time frame, how far it could extend on a daily time frame. You match that with what the analysts are saying, and that's your take profit for bigger investment opportunities or swing trades. We are your one-stop shop for everything investing. One minute, 12 seconds left. Unfortunately, we did not break out of that range. Still gesticulating here, unable to get below this blue zone. And this could be the push up that we were waiting for, but might just come a little too late. "37 seconds left. Please check us out on fractaleffects.com, where we teach high probability trading. Please hit the subscribe button, turn on your notifications so you know when we're live. Check us out on our social media, fractal.effects. That's TikTok and Instagram, where we're always uploading new educational material, trades that we've taken, some market analysis. But that's our time. Here's a little bit of homework for you. Again, US oil, come back later, see if it actually did push up from here. And did we get a confirmation later on, and did it extend? Even though this is messy and this is not something we would have taken. Just come back to see if all the points of confluence were met and that extension happened or not. But that's our time. We'll see you guys tomorrow.